Well, we definitely do see this trend. So again, when we started to invest in that retail segment in secondary cities in Germany, it was a private equity game. It was a family office, ultra high net worth play, and we now have seen the first big portfolio transaction in these secondary cities. I think Deka bought a portfolio for 1.1 billion. So you can already see that the institutional money, pension schemes, insurance companies, and the big investment fund managers are buying into that idea, because it's a simple reason. We buy into secondary cities, secondary meaning Lübeck, for example, that have indices that are better than Munich, because they are collecting the purchasing power of a whole area around Lübeck. We're buying in for an initial yield of 6.5-7%, which is a significant discount to the, and you have the same tenants than you would have in Munich, for example, or in Hamburg. So you pay. You buy in for a significant discount, and we definitely see a trend of more institutional money coming into these secondary cities.
I'd be amazed if you get 7% return on a high street real estate asset in Lübeck. There's presently one selling at a factor of 23.5. So 7%, you've got to be much smarter than the rest of the pack to find 7%, because I think it's going for 23, 24. I don't know, you're laughing. It's 24 now? Oh, good. See, we're out. So I'm glad you're still in.
Remember, we started to buy in 18 months ago. So
yeah, but we bought there. But look, we've bought in B cities for the last 20 years. I mean, that's nothing new for us at all. I mean, we've invested in high street retail in Nuremberg 10 years ago, 15 years ago. So we know our B cities. So this is not a new phenomenon. Going into B cities, it's our daily bread and butter. Looking at these cities, we're buying in Bremen, in Mannheim, in Heidelberg, in Karlsruhe. In I can't even go B city enough. I could probably shock some people, some Germans here, what cities there are in this country that we haven't looked at or that we're looking at. So I think that story is being oversold a little, and I think the majority of big investors have been in these markets for, Eric. We've been looking at these things for, I don't know, 5, 10 years, easily. I remember the first deals we did here when I joined unions, and now 7 years ago. Jesus, 7 years ago, okay. Was Nuremberg, and was Fürth, and was areas where, or Hanover. So we've done B cities, and the pricing there is sliding towards 4%, and it's between 4 and 5. Unless you have to do something to it, release it, and then maybe sell it for 4, that would of course work.
Well, obviously that's our approach always. We are active investment and asset managers, so we would not buy into a secondary city where on the real estate side any problem is fixed. But what I'm saying is that we have bought into we picked up a total portfolio of 800 millions now. To get up with this, the total the average investment volume is 7 to 8 million per asset. So we really talk about these small inner city high street assets, and the numbers that I just gave you are the average. We can we might offering the portfolio when we are up to 1 billion, and then we can discuss about concrete numbers.
There were 2 big German real estate myths on that. The first thing is that after 1 or 2 years digging deeper in A, the money flood into B and C locations. We made a lot of research for that, and fantastic, because you have a risk spread of 150, 170, 200 basis points. At the end of the year, I make my calculations and say, okay, how much money really go into Regensburg and all these things, beside a natural way, which is, to be fair, slightly a little bit higher last year than the years before, but it's still kind of a 80-20 business game on that. Big myth. I don't expect that there will be a lot of things coming up. One footnote will be, of course, that due to the lack of these portfolios, you have always these kind of Lübecks and Freiburgs and Leurs in, so it rises by nature, let's say this. So if the portfolio effect will be countable by maybe by end of this year, then you will see more these B and C locations. Second myth is situation that insurance company want to increase allocation according to real estate from 8 to 10. So I listen quite frankly and open. Every January, all the polls and sentiments, and this year we go for 100 basis point more real estate. At the end of the year, I make my sum. I say, oh, whoa, again, in the 7th year following, nothing really happened. So this is a situation. Again, we are facing a lot of stories and headlines, and I'm one of big push of the headlines. But by the end of the year, it's still the game of the big ones. If they don't have any evolution on that, there will be no big resi fund in Regensburg Süd for the explanation that there will be a case of Regensburg Süd. I like Regensburg Süd, by the way. But just to give you, it's still the game of the money of the A locations, and the B and C locations, they are more in the intra-regional activities going on, yeah, or on the portfolio side. Again, I'm not against Lübeck, but I see that the money don't come from London to Lübeck or Regensburg. That's the story. Full stop.
Well, we just went with one of our investors to Essen and smaller. So the smart money is coming. I think it may be, I'm sure it's very smart. I would argue that it maybe is an issue of sampling, of getting the data, because much of the money actually is totally quiet. They don't publish, they don't do anything. So it's very difficult for you to trace these things. But I think that more international money is going there than is generally known.
Sorry, last comment. I mentioned earlier on, it's not a secret call, it was already published, the big the resi portfolio, 1.1 billion, 70,000 flats / commercial from GMP. Will be the signing within the next 4 weeks. If you dig deeper, and Catella has no stake on that, just mentioned this. If you dig deeper and see the portfolio structure, this is A, B, C, D, E, F, G. I see the headline by selling these from the buyer, by the way, and I don't know the buyer, but I can imagine that this is our entrance, maybe it's an international one, our entrance to the German regional cities on that. This is really a mixed portfolio with a lot of positive things. It's a portfolio by size and by volume, but you will see a lot of these locations, maybe also Union maybe before. Seems polite, by the way, but just give you an indication that we will face headlines that B and C will be driven within the next weeks and quarters just by these big portfolios on that.